尊敬的各位来
Distinguished guests, good morning. My name is Zhao Jiaying. I'm from the Beijing Green Financing Research Institute. Welcome to the Fintech, the innovative era of green financing. Now please join me to welcome our MC of the session, Dr. Ma Jun. He's the director from the Center for Finance and Development, National Institute for Financial Research at Tsinghua University, and also the chairman of Green Finance Committee of China Society for Finance and Banking. Thank you, Jiaying. Distinguished guests, ladies and gentlemen, good morning. I'm very honored and delighted to be the host of our Fintech and innovative era of green finance. As we all know, that green finance is quite a niche idea 5 to 6 years ago. If you ask any person from the finance industry, he or she wouldn't know what that is, what the concept is. But over the past 5 to 6 years, it has become a mainstream concept and even has developed into a system. For instance, we have the green debt that about 11 trillion RMB, so volume. Altogether, if we consider small banks, it would be 13 trillion RMB. We developed green finance about 10 years later than that of Europe, but now we have over 700 green funds and all those green achievements. And for green finance, it still accounts for very limited proportion, so we still have a huge room for growth. And I believe that compared with the 10% yield now, we will definitely have a 10 times of growth in the future. And we have all sorts of endeavors in green products and all the explorations. I believe they will all witness a 10 times of growth. As President Xi said at a UN session, that China will achieve carbon neutral by 2026. That is a grand goal. And also, it is kind of like a promise which will be achieved via the balance between demand and the supply. So green finance is a rapidly developed sector. It also has a lot of bottlenecks from many perspectives. For instance, from the policy, incentive, and also in terms of standards and disclosure of data. Also, what we are here to talk about is how to identify green projects and green products and the challenges they face. For instance, the green agriculture products. For instance, the organic products, whether they are organic, whether there are any pesticide residue, whether the residue is lower than the standard, and also for green architecture. When we talk about that, it has to be energy efficient and saving water. We need to make sure that we have all the relevant standards and certification to verify that they are indeed green buildings. So all sorts of examinations and certification improvement process are very costly. And in the future, we will need to use digital technology to solve those challenges in a more efficient and cost-beneficial way. And today's session is co-organized by the Green Finance Committee of China Society for the Finance and Banking, and also Ant Financial, or Ant Group to be precise. And I want to say thank you, a big thank you to all the sponsors and all co-organizers of our session. And this morning, we're going to talk about how to implement those technologies in details and in different scenarios. Next, please join me to welcome about a dozens of speakers. They're going to join us online by sending us a video that is pre-recorded. And some of the speakers are here today. And now, please join me to welcome the Vice Chairman and Executive Director of Paulson Institute, Deborah Lehr. You know, Paulson Institute has done a lot of work in this regard, and when I attended G20 session in the US, Paulson Institute and us conducted a lot of events together, and we made a lot of explorations in green finance and fintech. Now please join me to welcome
On behalf of the Paulson Institute, it's a pleasure to be joining the Inclusion FinTech Summit. Greetings to all the participants that are attending in Shanghai or joining virtually. Congratulations to Ant, to Dr. Ma and Tsinghua University, and the many partners in this conference for hosting an important forum for the global FinTech community. Despite the challenges created by the coronavirus, this platform is much needed to encourage discussion and collaboration for finding solutions to some of the major challenges that we're facing globally. This conference's role is more important than ever. I'm pleased to be speaking today about the broad issues surrounding green and sustainability ambitions through the lens of finance and fintech. As the world stopped due to the spread of corona and people hunkered down at home, the internet became our lifeline. We shopped, we played games, we attended school, watched webinars, and had quarantine happy hours, to name just a few of the activities, all thanks to the internet. At work, the forced stay-at-home orders accelerated a trend that more and more of our jobs can be done remotely. And as a result, with no car commutes, fewer factories in operation, and the shuttering of office buildings and shopping centers, it was no surprise that the environment improved. The lockdown from the coronavirus have resulted in cleaner air in many polluted cities, reduced power usage in commercial buildings, and improved the water quality in many of our cities. And people stuck at home had a chance to slow down and appreciate nature. Bird watching has skyrocketed. People are hiking and walking more, as well as taking advantage of being outdoors. This has brought increased awareness of the human impact on the environment, the larger and more consequential climate change challenges ahead, and the pressing need to encourage green and sustainable development for our future. Indeed, despite the pandemic's immediate difficulties, there is a growing consensus in many countries that as they rebuild their economies, their recovery should be a green one. This is a historic opportunity to reset, as countries will invest over $20 trillion for pandemic recovery in the next 16 to 18 months. It is a chance to invest in green development. A core belief of the Paulson Institute is that market mechanisms must be a driver of sustainability, or they will not last. Government funds alone can't meet the needs to reach the global goals for climate change. Yet the private sector must understandably put its money where it can achieve the best returns. Therefore, for a green recovery to be successful, it requires good government policy combined with innovative private financing models. Fortunately, we are seeing both of these in many countries today. The EU has taken meaningful action with the passing of the world's largest green stimulus plan. Member states agreed to a 7-year budget and a special pandemic recovery package that earmarks about $570 billion for the spending against climate change, which is estimated to be about 30% of the budget. And China continues to make addressing environmental issues one of its top 3 priorities. Ant, for example, has shown what a difference innovative thinking can result in through Ant Forest. It is promoting the awareness of sustainability combined with the real results of reforestation through its gaming app. But there's still a very long way to go. As countries develop their economic growth strategies, there's a strong argument for green development to be at their core. The challenge is how to build in the necessary financing mechanisms. The price tag for green development is hefty, it's true. From mitigating the physical effects of climate change, transitioning to low and zero carbon growth, to adapting for a resilient future with green infrastructure, none of it is going to come cheap. Take the climate financing gap, for example, which some estimate at about $500 billion annually over the next 10 years. And an overlooked but potentially economically valuable asset to be considered during the post-COVID recovery is the value of nature. It may sound a little far-fetched, but bees, birds, and trees should actually be considered an asset class. It is possible to put a price on the value that pollinators, productive soil, and watersheds bring to our economy. In a report released by the Paulson Institute just this month, Financing Nature, Closing the Global Biodiversity Financing Gap, we estimate that the current financing gap in biodiversity will be about $700 billion a year for the next decade. Look at the service that pollinators provide in agriculture. They are essential to grow wheat, corn, fruits, and more, but they are dying in record numbers. The loss of these species could lead to a drop in annual agricultural output of over $200 billion. And the secondary effects of pollinating crops for animal feed, such as alfalfa and cattle, increase that price to $500 billion a year. It is worth the investment now to try to save these pollinators and other natural assets than after we have to mitigate against the impact of losing them. Even with the best of intentions, the world can't reach its goals on climate change without increased financing devoted to a green agenda, and that must include the private sector. A green agenda has to start with strong political will, which we're seeing globally, except maybe at the federal level here in the United States. China put the global dialogue on green finance on the world stage during its presidency at the G20 in 2016, when China made it one of the top priorities. Since then, the momentum around green finance globally, and especially in China, has been growing. Internationally, in a surprising move, central banks have come together to better understand and manage systemic climate risk through the Network for Greening the Financial System. It was launched in 2017 with just 8 founding members and now boasts 69 members. It's grown very quickly. And in 2018, under Dr. Ma Jun's leadership, the Green Investment Principles for the Belt and Road were launched as a global initiative to embed sustainable development principles into investment and business operations of future Belt and Road projects. 37 leading financial institutions have pledged to adhere to these standards, and the number continues to grow. And China has definitely made impressive progress in the mainstreaming of green finance as well. It has one of the most ambitious programs globally, from green bonds, green insurance and green buildings, to sustainable parks, sustainable lending, and the topic of this conference, green fintech. Globally, green finance growth was poised to have a big year in 2020. And while it has been impacted by the pandemic, the outlook still remains positive, with a number of exciting things to look forward to in the second half of 2020. Green bond issuance jumped 26% to $47.8 billion in the second quarter compared with the first quarter of this year. We're seeing growth internationally also. Germany successfully issued its first sovereign green bond earlier this month, and countries across the Middle East, particularly Egypt and the UAE, have green bonds at the top of their agendas as well. For China, the main trends are mandatory ESG for companies looking to list on their stock exchanges, the proliferation of green REITs, the emphasis on the new infrastructure development, the valuing of natural resources with respect to addressing biodiversity loss, and the first actual trades on China's national carbon market. All this is quite energizing for green finance, but there are still a number of challenges that must be overcome in order to mainstream green finance and to scale it up. Arguably, the most consequential trend in green finance for this group is the potential to effectively channel fintech as a solution to harness to address the barriers for green finance, which would mean greater green and sustainable development. Globally, the topic of how to engage fintech to enable green finance was introduced as part of a 2018 G20 Sustainable Finance Study Group's docket of work. And like with green finance, China has been at the forefront in this respect as well, with national policies directed at strongly encouraging fintech as a central pillar for financial systemic development. China has introduced policies that have launched fintech regulatory sandboxes in Beijing and other major cities, achieved development in driving the underpinnings of a digital RMB, and promoted innovation in blockchain and other relevant technologies. The Paulson Institute and the Tsinghua Center for Finance and Development have taken the lead in exploring practical applications of fintech for green, with a report released earlier this year that highlighted 4 specific cases in China for use of fintech. One of the case studies is a fascinating project by the Huzhou Bank in Zhejiang. The bank is taking the lead in rating companies in their province on sustainability as a means of encouraging green behavior. The bank recently won an award by Asia Money in recognition of its excellent work. In addition, they've developed a color-coded system for projects, then created an online marketplace for investors seeking green investment opportunities. This platform is strongly supported by China's central bank. Theoretically, investors from around the world can access this site to support green growth in China. And it's a model that can be replicated in other parts of China, but also in the world. The Paulson Institute is also working in Latin America, which is similarly suffering tremendously from the health and economic impacts of COVID-19. There, we're hoping to bring some of the online games from China, such as Ant Forest, to promote green behavior and exploring innovative financing for reforesting in the Amazon. We're exploring how sustainability can be a core part of the region's economic recovery, including through debt for nature swaps as a means to take advantage of the region's wealth of biodiversity, and how nature can help in a time of financial crisis. China plays a very important role in this, given its holdings in Latin America. This ensures that value is placed on the protection of nature. And again, it's the same in the Middle East. The high connectedness of places like Egypt, with a population of over 100 million, it means that smartphone apps are the best way to reach its citizens. In many ways, it's like China of 15 years ago, with a large, highly wired population that's largely unbanked. Chinese fintech really would take off there. Egypt's launching a major sustainability push and has much to learn from China's model. We've seen the growth of fintech globally, which saves on traveling to the bank to pay bills or get money, reducing the paperwork necessary, thus saving trees and increasing consumption through e-commerce. Fintech has the great capacity to begin addressing the scaling of green finance. There are plenty of opportunities in deploying fintech in green financial institutions and in helping drive the greening of industry and advancing current efforts in regulatory technology, or RegTech, as well. Fintech can also be instrumental in greening areas such as asset registration, monitoring and reporting, supply chain management, and certainly risk management. The ability to not only engage more micro, small, and medium-sized enterprises, but to work with them on becoming sustainable is another large window of opportunity for fintech, and one that I know Ant is passionate about and very actively involved in. Just like fintech can help on financial inclusion, it provides the platform for these small firms or poorer areas to also learn how to become sustainable. These opportunities are not without challenges. The lack of globally uniform standards defining what is a green investment, the lack even in China on differing definitions of what is green, or on criteria for loans, the poor quality of environmental data, the need for capacity building to train qualified personnel, and the need for education around sustainability all need to be addressed. Also, we need to look consistently at ensuring that the same standards that we use at home in our own domestic markets are the ones that we use internationally. We hope that China remains a leader in driving this move towards green finance, including using Fintech as one of the means to do so. It's the largest market for commercializing and testing these new innovative ideas, but also China is driving much of that innovation. To close, the decisions that governments, institutions, and individuals make today will have a significant impact on our future. There's no question about the linkages between climate, our environment, and nature, both the good and the bad, which leads to situations like the pandemic that we're facing today. As we have an opportunity to rebuild and redesign our economies, our healthcare systems, our environment, we should seek to make the long-term investments in a sustainable future that will not just pay off financially, but pay off for our own health and well-being in the future. Many thanks for this opportunity to join you. I wish that I could have been there in future, but send along my best wishes and those of our chairman, Paulson, for the success of this conference's important agenda. Thank you.